Welcome back. Let's talk about Reliance Industries. As promised, the numbers were in line with street expectation, but the stock has slipped. In fact, currently hovering at 2,090. It's a good 11% away from its life high of 2,360 that it had hit in the month of September. So even as the markets continue to push towards all-time high levels, Reliance Industries has been pretty range-bound for the last 9 months. Jal, morning, and thanks so much for joining in.
Morning.
Your thoughts on the stock and what could potentially drive Reliance Industries from here on? Because we all know about the big picture of Reliance Industries, their retail ambitions, their geophone launch. So in a way, the big picture of Reliance Industries is known and has already been priced in. So from a stock point of view, over the medium term, what could be the potential drivers over and above that?
I think you've hit the nail on the head. I think exactly as you said, on retail and on digital, things are known. I think one needs to understand prior to answering your question explicitly that the expectations built into these businesses have been excessive. So these are great businesses and, these businesses will do very well, but it'll take time. And therefore, I think those expectations is what is coming back down to earth, so to speak. Now, to answer your question more specifically, what will drive the company going forward? If you look at actually the business split, the non-digital and retail businesses, which primarily comprises of O2C as well as the upstream oil business, is actually 74% of the company. So O2C and the gas business, KG-D6 gas business, is 74%. So if anything, those are the businesses which will have to drive the earnings of the company. The good thing is that both these businesses, in my opinion, are actually poised for a recovery, led by perhaps KG-D6. KG-D6, the gas ramp-up has been ahead of schedule. It is essentially the second field, the satellite fields have come on stream from April, and Reliance is already producing 18 of the 30 MMSCMD that is planned to ramp up to over the next 2 years. Moreover, from 1st of October, Reliance should see a 50 to 60% price hike in a business which is a fixed cost business. So therefore, we think that over the next 2-3 years, KG-D6 alone could drive a 10,000 crore increase in EBITDA. That's a big number, right? Even by standards of its other big businesses. So that is one. The other thing is that the O2C business, the oil to chemical business, if you look at even this quarter earnings, there was a 40,000 crore increase in EBITDA from this business versus digital only about not even half of that, and retail a small fraction of that. So that is a business which has been very suppressed, which has been very depressed. And even if you look at Singapore margins as a benchmark, today are only $2.4 versus $5 as a long-term average. So therefore, this is a very large business which is starting to turn around, and the earnings from this business could drive. This business could be very significant going forward as well. Sorry, slightly long-winded answer to your question, but I hope that comprehensively answers it.
Jal, good morning, Prashant here. So what does this mean for earnings or, maybe earnings upgrades over the next couple of years for Reliance in terms of as compared to what the consensus currently expects?
So can you tell me what is the consensus? Okay, that's a difficult question to answer. I think in Reliance's case, there are many moving parts, right? Frankly, consensus would have moved around overnight post results, and I don't think there's even Bloomberg as yet carries the consensus. So I don't know what the consensus is at the moment. Okay. But having said, I think it's going to be a change in mix rather than an absolute number which is going to drive things. I think the the numbers for the O2C and gas business is going to be hiked versus the Reliance Jio business, as an example. There needs to be some significant tariff hikes for those expectations to materialize, and that's just the telecom business. The digital business is a future growth business, but I think there's going to be a change in mix in earnings more than consensus.
No, but the question is also whether the industry will go ahead and hike tariffs materially, because if that happens, then that benefits their competitor, Vodafone Idea, or they could choose to keep tariff low and try and gain subscriber and market share from them. Go ahead.
Absolutely. No, I mean, I was just so my next question was what is the consensus? Fair enough. I'm just the reason that ties in is because Reliance has underperformed the Nifty over the last 1 year or so. If there is an earnings upgrade cycle which is in front of us, maybe this underperformance will start to reverse. Any thoughts, Jal?
We are, I think we, along with the street, are looking at a very significant earnings growth already, and that is only fair, and because there is a fair bit of investments which have gone in, and to that extent, potentially profit growth to that extent should be significant. For example, this year we are looking at a 19% profit growth. Next year we are looking at actually a 29% profit growth, and I don't think that is going to happen in any case. I think the tariff hike question is a very important one, and while we are also building in a modest amount of a fair bit of tariff hike increase, I think the strategy Reliance has been adopting so far is to add to the customer base very aggressively rather than have tariff hikes. Even in this quarter, they've added nearly 15 million customers, and to the extent of the spectrum build out, among other things, they have got potentially a bandwidth of adding more than 200 million customers. So I think it's a significant balance that they're looking to build in. As long as they're getting customer increases at a very significant pace, the tariff hikes would be calibrated. That's in my opinion, the primary strategy.
Jal, it's a pleasure speaking with you. Thank you very much for joining in. Have a good week. In fact, Reliance Jio's good earnings have had a positive rub-off from Bharti Airtel. So that's a stock which is up close to about 0.5% in trade. Remember, Reliance Jio's revenue growth at 3.5% was ahead of street expectations of 1.5%. Though Jio's strong subscriber growth addition in Q1 cannot be extrapolated to Bharti Airtel as well as the rest of the industry, because Jio